Alrighty, Doc here from North America. I thought I had plenty of time, but I obviously ran out of it. Let's see what's going on here this morning. Let's see. There's the British pound against the dollar. Let's go check out Swiss. But you can see here the pound is going up against the dollar compared to all the other products. Again, we have a lot of. I guess you could say we're always hopeful for the actions in the British pound. We expect to see strength. We're constantly expecting to see strength, like I expect to see strength in the dollar against most pairs trades. I think the math is constantly there telling us that they want to take these things up. Let's open up that chat line so I can see what's going on here. Let's see, trading. There we go. All right. And so there is the dollar Swiss. I mean, it just keeps on getting punched up higher and higher and higher. And it doesn't, it doesn't seem to be able to let go. We're seeing the strength in there. Let's see, where is it at? Let's put it up on the J4X2 right there. Let's grab that mousy. There's the mousy right there. And you can see it. That's kind of firm. Actually, it's just firm. I want to say it's just a little bit higher from Friday, and that's about it. It has made some lows in there. There is some nervousness in the market overall. There's a unwind that went on last week. I think we talked about that. We had been seeing the unwind. I mentioned the unwind. And they tried to jump ahead of it. Remember, I was talking about it on Wednesday, that there was supposed to be an unwind. And the unwind, the rumor was out there that something was being unwound because of portfolio adjustments and losses and, a combination of all of it. And there's like $319 billion of equity unwind supposedly going on, and we just saw 30 billion of it occur on Friday, which seemed to put a real damper into the brokerage houses themselves and banking. And at the same time, Doc is getting a warning signal that I don't see often. I've only seen it 4 or 5 times in the last 40 years. We're getting a warning signal that there is some real action coming to the equity markets in the next 1 to 3 weeks. I mean, explosive type 1987, February, March of 2020. Wild action coming around the corner there. So traders, be careful. Be hedged. Don't just be naked long. This is the time where you put on the collars and sit back and go, okay, I'm insured. I drive my automobile with car insurance. I have house insurance on my homes. I have health insurance, and why not insure your portfolios? And so that's where we are now. All right. Yes, the dollar is firm. There's not much more to be said about that. We've said it all. This is the era of QE. They like a firm dollar. The quantitative easing Federal Reserve likes a strong dollar, and they're not really going to let it go. It's just not. It is what it is. And they're not going to let it go, no matter what goes on. It has to happen. Because you can't run a government the way they've been running it, with all the liability that they've taken in. They have Citibank, and they've pumped up all the major institutions, and at the same time that money does not make it out onto the street. And so what you're having is, you don't have the fellow down the road that, or the fellow nearby that was a great car mechanic and he's been working for somebody, and then the bank says, you know what, we've got some extra cash, would you like to open up your own shop? And it doesn't work like that anymore. Instead, they pump up the dealership, give the dealership lots of more money, and the individual who would like to open up his own business or her own business gets stalled out. And that's how you don't have the inflation on the street. But even so, they try to hold that money tight, and they try to only plow it into the banks and the brokers and the institutions and so forth. But it's still, there's a day of reckoning always coming when it comes to the market. All right. Let's see. And I mentioned that whole thing last week with the 300 billion unwind, and then someone's just texting me now that's not listening to us and sending me some stuff over about it. How I mentioned it. There we go. There we go. Unwind. I answered that at the same time. No one's asking any questions on Chicago Quant there at the moment. It's kind of quiet. All right. So there is the strength there. What else can we say about the Swiss? It emphasizes what we see with the dollar, and that is it wants to go up. And when you look at it in the Chicago Quant, we've been weekly buy way back here, right here. And you can see what it's done. The dollar has climbed tenaciously high. I mean, we've gone from the 89s. The 89s. Yeah, the low 89s, high 88s to, is that the high 80? Yeah, high 88s to 94 on Friday, 94.18. So Mr. and Mrs. Dollar is showing incredible tenacity and enthusiasm, I guess you could say. All right, there's the cable. We've talked about this. We really think that the cable it's still in a weekly sell, but the dailies are jumping up. We'll see if it folds over again here going into tomorrow. We don't see any particular reason why it should see any real demonstrative lows. We suggested last week when or 2 weeks ago when we went to the weekly sell, we didn't think we would see anything lower than the 36s. In this case here, you can see it. It got down to 36.70 basically, and the day before that was 36.74. So we didn't really expect to see anything more than this area here be challenged. And in this case here, if this keeps on going and we get this thing moving into the weekly buy again, this is going to be the bottom, and they'll be taking it back up into the 40s. And that's usually the way we look at the cable. We always think that when it gets into a daily buy and a weekly buy, we look for the 140s. Doesn't matter if it's at 125 or 135. I always say, whoa, 140s. As I take a sip of my coffee. And we've seen it do it, too. So, Euro, interesting. Some of the conversation about the Euro in general here in the States is that the European Union has really missed the opportunity to be on track with the United States in the COVID inoculation process. And they think that that's going to push Europe a year behind economically, which is going to hold back inflation for a while. Interesting point of view. And it does make some sense there. You can see here we've been in a daily sell since here. Can you see that right there? Yeah, I guess like this. Since right here, we're in a daily sell. And you can see we've been in a weekly sell since back here. The pressure is on. That's what the math does. And it keeps us normally relatively safe. Gives us a good idea where things are going and when they're going to, basically stall out or bottom out or however you want to look at it. So, let's see, what else can we say about that? Not there. Nuremberg, I'm looking for someone. Okay, there it is right there. All right. And that is gone. The euro in general, I'm impressed that it survives this high. You would think it would be on one of those tears back down to par. How many years did we listen to people say, oh, par, par, par? What that means is basically that it's going to go back to 100. We're at 1.1780. And, we've heard them over and over, the par traders. Hey, Joe, how you doing? Talk about, the euro going down there. Now, with the amount of stimulus they're doing in Europa, through the ECB, I would assume it's hard for it to head down to the par. But it's definitely going to be a challenge to get it to lift up, that's for sure. Just not enough growth. And money must find a place to go to grow. I hope your weekend was good, Joe. I hope it was a nice, positive weekend. We had 80-degree, how did you do that in Celsius? Let's see. We were 83 in Fahrenheit. So we were like 21. No, we were like 18 to 20. We were like 20 Fahrenheit on Friday. We were like 16 Fahrenheit on Saturday. Maybe 15 on Saturday. And then yesterday was much cooler, down around 12. And interesting wild winds. There. That is what our weekend looked like. So I hope yours was just as good there, Joe. Now, we talked about Turkish Lira. The fact that that it got caught, I guess we should put like a yellow around this, not a green. Make it emphasized, or even a red, like that. I like that. The red is even better. And I guess we could fix the inside of it, like that. Then it, there we are. Because of that, we're expecting to see the Turkish Lira trade up into the 8. They're going to take out the 850. We see this, this is coming now, and we're pretty much almost in a weekly buy. We're in daily buys, and this is the second day in a daily buy. Where is it? Let's put that in there. Right there, and we were given the warning right here to cover because of the signal we had there. And so you cover here, take the distance of that loss. I guess you could do this. The distance of that loss, and we're going to make that like a red also. Let's see, go like that, and make that red, like that. And then we're going to make it dashed or something like that, so it's not so so tough. And because of that, we expect to see this go that much in the distance on the upside here, from there to there. That's what we're expecting now, and it'll make it back. So in other words, what has been lost in the math, we'll make it back in the math, and that's how. And it might even go higher. We might go into the low 9s at this point. I was supposed to put hand calculations into it. I didn't get a chance to go after it this weekend, chasing after too many things. But that's just a generality. That's where we're going. This product now is going to make new all-time highs or new all-time lows, however you want to describe it. Remember, when this is going up, it's really going down in value because it's taking more Turkish Lira to buy a dollar. It's kind of like when you look at anything that's designated as USD / and then that pair, like if it be it Swiss franc or Canadian, any of those things, or Turkish Lira, it's basically telling us that the product is going to go much higher in price. It's going to be more dear. People in Turkey are going to have to spend more money to buy dollars. And so we're looking for it now to move up into this area right here. All right. And let's save that too. Save. Let's see, where's that? Save workspace. I don't want to redraw that in again. Save workspace as. Where's the as? Right there. And save. Ta-da. And that's where we're at the moment. I guess things are going to play out over the next couple of weeks. The markets are going to be pretty wild. I think we're going to see some pretty wild markets in different directions, and probably this is going to be the candidate when people see this thing trading beyond the 8.5. I think 8.5 is the all-time high right there, and so when they take it to the 8.5 and get beyond that, people are going to be scratching their heads, going, "Ouch! What happened there?" All right. Now let's jump over to what we do is we normally go to the CAD, dollar against the CAD. And you can see here we've been in a daily buy from here, so it's weakening also. You can see it's been in a weekly sell, so it's we're stuck in a neutral situation. In other words, you got a buy going on here, and we've got a sell going on from here, and it's winding its way back up to where it started from in the weekly sell of this area here of the 127s. So we'll see what they do with this. That alone right there tells us it's up firm a little bit in here. So we're looking at a lower oil, we're thinking at the moment. let's take a look at NASCAD and see what that looks like. And that's these two pairs trades in particular we follow to watch how the oil market is trading. Now you can see this is firming up, so it's basically saying oil should be rallying. So we'll say it's sideways up. Now let's go take a look at oil. Right there. Sideways up. Right there. Yeah, it's up a little bit. It's up firm. But look at this. We're starting to flirt as we when we sent out that earlier. I don't think it was like that. And now we're really starting to press. So this is trying to go into a daily sell again here. Might as well throw that little red line in there. Must have been lifting up earlier. And you can see the weekly tried to challenge the weekly sell last week, failed at it. It's trying to do it again this week. And we've been in a weekly buy now on this product for a while, all the way back since late November, since the 40ish area, the high 40s, mid 40s, something like that, right around in here. Can you see that? Let's go like that, right in this area here. See that right there, the weekly buy. So it's been an interesting adventure up. They freed up that ship in the Suez Canal, and that seemed to put a really odd twist into oil markets. And at the same time, we're seeing a lot of strange stuff go on with world markets. Like I said, I've been getting. Let me show you what the signal I get. I discovered this pattern, and it's not a pattern of. Let's see where we can do it here. Let's see. Let's go right here. Oh no, it's not in this one. That's right. Okay, so open up. I discovered this pattern in volume, and I don't follow volume. And I was in the very beginning, in the late 70s, early 80s, I started looking at some volume, and I was trying to understand the marketplace. And they'd legalized listed options, and we were trying to figure out exactly in our head. Notice I talk in a third-party situation there. And this is the March futures, which has expired now, which had three. I said, where are we? We must be on 4 now. So we are on 4. Let's just take a look at the June contract. Yeah. So there's June. So it's 3 new wave signals. And when we get these new wave signals, they're a volume indication. It takes 5 days for it to play out of a full week. And they have to have a certain pattern to them. And ever since 1982, I really discovered that they were something, because we had 4 or 5 of them come in a row in 1982, and the stock market exploded of the August 82 rally, one of the most historic moves in the stock market in history. Right up there with the 29 crash, with the 87 crash, with the March bottom of 2020. It was a pattern that reoccurred, and we've seen it happen about 6 times in the last 40 years, and every time it's come at some noisy point in history. Like I said, 1982, the crash of 87. It also occurred at the bottom of 88. From the flash crash of 88. It happened at 2000 at the internet bubble. It's happened 1 or 2 more times since then. And it's doing it again now. And so it's basically like this and then like this. I mean, it's just like one week after another. And we had one here. And then when one occurs, it's usually it can go obviously one of 3 ways: sideways, up, or down. We use our regular math to tell us what's going on, especially when you get a weekly buy and you have this occur. We start to expect that it's going to be an up move. And in this case here, we're in weekly buys, and we keep on having them. So it's not played itself out yet. And what I thought it was, I know this is odd, but what I thought it was the New York specialist system. And a lot of you here are not really aware. This is more of a currency conversation. But the warlord structure, or the controlled trading that went on with the New York Stock Exchange for a century and a half, where they controlled the stocks uh, in conjunction with the treasurers of each of the corporations that the stock was. So in other words, the fellow who was running the Ford book on the New York trading floor, that's the only place you go on the exchange floor to trade Ford. And he was working along with the treasurer of Ford and the fellow who was trading General Motors. He would trade his stock somewhere else, and and he would be a different specialist, and he would work with the treasurer of General Motors, and they would trade together the stock and lend out stock to them when they needed it, and vice versa. And so I thought this was a manifestation of the New York specialist. But we've lost the New York specialists. They've been gone now for decades. And going into 2008, they were really gone. I mean, really, really gone. They had very little power now. Very little power. And that's why the exchange was sold off to the ICE, the Intercontinental Commodities Exchange. So now the New York Stock Exchange is owned by a commodities exchange. And so anyway, the new wave signal still works, which is really odd because I always thought it was some manifestation of the New York specialist system, which always confused me. I mean, when it stopped, when the specialist disappeared, I thought the new wave signal would disappear because I back tested it all the way back to like 1920. And once I discovered it, I went back in history because it was very easy to get Dow Jones Industrial volume and price historically, very easy to get. So anyway, we fast forward to today, and for the last 3 weeks, each week has been a new wave signal. One was in the Dow Transports. The following week was the Dow Transports and the NASDAQ, and last week it was just in the NASDAQ. So it's kind of been 2 weeks of the Dow Transports, 2 weeks of the NASDAQ. And you can see when this started, the Dow Transport and the Dow NASDAQ did us a new wave signal. And we could have one in the Dow Jones Industrial Average, or we could have one, in the American Stock Exchange, or the Dow Jones Utility Index, and they don't mean as much, but when it's the NASDAQ and the Dow or the transports, it means a lot. So we're watching this, and this is a warning sign, like I'm saying to everybody. Collars. Put your collars on, sell your calls against your longs, buy puts against them, sit there and just do like a 6-month thing, and you'll walk away when the stock market is up or down, 30%, you'll be sitting there with your capital and you'll be fine. If it goes up 30%, you'll be doing real fine because your underlying equities will go up and you can roll your options up, the call side up. If it crashes, your puts will make all the money you didn't make in your stocks because your stocks will have lost money, and then you can take that cash and buy more. And so instead of you being down 20 or 25% in a market, in your portfolio, you're down like 2 or 3%, and now you've got all this cash to buy more of a product. And that's how that all works. Okay. And if anybody wants to understand the collars, like a collar on a shirt, just let me know, and we'll discuss it even deeper. All right? All right. It's just basic option or binary concepts. Now, let's go back to the currencies. Because, I just wanted to inform you, this is going to be on my mind now for like a week or two because it's happening, and it's happening to us live, and it's never failed us before. And so, it's well worth watching for. And you can see the last one right there. And I think there was a previous one before that. I don't see it there, but let me go back and look at the other. There it is right there. Yeah, there was one right here, a new wave signal right there. I guess it was up higher. It was probably up higher right there. And then we got that move on the Dow Jones Industrial Average of 2,000 points. So, when it does it, it does it. Then you can see right here, we had one where it did it on the Dow 30, and we had a move from the 26,000 area all the way up to the 30,000 area, 4,000 point move in literally 4 weeks. So it's definitely something you need to pay attention to, traders. And you know that it'll have some influence on the currencies, so you must be careful. The idea is preservation of capital. Preservation of capital is the most important thing of all. This way you come to fight another day. All right, now let's drift back to the currencies themselves, and then we're going to close this out. Save workspace, and then close workspace. There we go. Now let's take a look at the action in the ruble. As we were looking at, there was the Turkish Lira situation, just to remind you there. And it seems like a lot of things are starting to line up in some really aggressive situations there. So now there's the ruble. Ruble fell into a sell on Friday. You can see it's up a little bit, or flattish. Today we are on a weekly buy from here, and we were in a daily buy up until Friday. See it right there. We went to the sell. Let's put that up there. There we go. And that's what the fact check spreadsheet is all about. When you look at the Excel spreadsheet on there on the left there, it gives you a heads up of what our math is trying to tell everybody. Now let's drift over to the yen, see what the yen is up to. You can see here the yen's been in a weekly buy for a while. Was that back since the first week of January, and we've run from the 103's 4-ish area, basically 104, up to the 109, 110 area, something like that. And you can see we've been in the daily buy now for 3 days, right there. So it's a winner chicken dinner. And this was a sell, I guess, right there. But you couldn't take the sell because why, traders? We're in a weekly buy. All you could do is take your profits. And then it climbed into the daily buy right there. And I think it actually gave us a loss, didn't it? Right there. Yeah. And so it kind of ground in the wrong direction. We went into the sell there. And again, you couldn't take a sell. So we knew that the next buy was going to be even better. And of course, there it is. It's been a nice one. It made any money you gave up here. Our math always does that. It always makes up the money that it loses. It wins more than it loses, and it always finds a way to give you back what it has taken from you. And that's what's so cool about it. And that's why we can do the webinars, because at least I'm not putting you in a dangerous position. It would be nice if you all were trading options, of course. But, if you're trading hard delta, at least it gives you a fighting chance. And then we have every rare instance, we have a situation like this where it was actually in a weekly sell right here on the Turkish Lira and a daily sell, and it made its money. And then news came out over the weekend and Explosion City. So, we have to look at that as a loser, all your chicken dinner. And then now we're heading back to winner, chicken dinner. All right. Now let's take a look at, what I wanted to look at was, because of the way the euro is moving compared to the cable, I want to look at the euro versus the dollar. Something we have not looked at in a while. You can see here, it went into the weekly sell up in here. How many weeks is that in a sell now? That is 13 weeks in a sell. So it's been in the sell since the end of December, and in a weekly sell. And we don't really look at it too much. We always look at the two individual products. You can see there it was a winner chicken dinner. It went into the daily sell right there, and sure enough, with being in a weekly sell, you were able to take that short, so forth and so on. Whereas when it goes into a daily buy right here, you can't take it because, again, traders, why? We're in a weekly sell, right? And then you can take this sell right here and another winner chicken dinner. And then you can take this sell right here, another one. Oh, what happened there? I think what in blazes did I do there? Did I duplicate something? Now I'm confused. Oh, I know what happened. I moved, I guess, our daily up to the main chart, right? Is that what it is? That must be the gas line 3. So let's see. Let's make so super has to go to the bottom. Let's do that. Just accidentally dragged the mouse. Let's see. No, let's cancel that. Close that. And this will double click on that. And this needs to go to the bottom. Why is it not giving us a bottom? Okay, I know what I need to do. I need to move this to 2. Properties. Format 3. Move it to 2. There we go. And then we go and format this, and it'll give us the bottom we can go to now. There it is, bottom. There we go. All right, accidentally dragged it with us. So it's been some nice wins out of this thing here. And we don't really look at it that much. I mean, there was a wonderful win. Let's widen this a little bit so you can see it more. But it's a trade we have not looked at in a long while. Not many people ask about it anymore. You can see it was a cute little win here. Cute little win here too. Instant gratification, very fast. Lots of winners. Here was a one. Very fascinating. Dragged on for a day or two and then crash-o. And then this one was real profitable. And then this one was real profitable. They're all profitable. So it's like 7 for 7. Fascinating stuff. We don't, like I said, we have not looked at the Euro cable or Euro British Pound pairs trade in a while, but it's been interesting. It's been going on. Let's move this up like that. And move that up. It's been going on since, basically the first of the year, end of December. And so, the markets in Europe know that the cable is the place to be. And that's what's been going on there. So every time you see it on the fact check spreadsheet, you go, oh, it's in a daily buy for a few days. Oh, there's going to be some problems with the cable. But not really. What it's really come down to is the fact that it's been 13 weeks right there. You can see on line 15 right there on this fact check spreadsheet. So just thought we'd mention that. We had not really looked at that. So it's been kind of interesting pairs trade to look at. Now let's drift over to the Zalti. Zalti is such an interesting product. It looks like it's really active, but it's not. It's a very solid, consistent product. Locked in the 440s versus the 460s. Not bad. I mean, wouldn't Turkey just die to keep their product locked in the 5-somethings to the 5-somethings? I mean, really. You can see we went into a weekly buy here, and then we had a couple good days of wins. And then you can see we corrected. And then another one there. Another winner. And then now another winner. But they're not really going too far. And that is the action that we're seeing there. So TGIM traders, thank goodness it's Monday and we got a market to talk about. All right, now let's jump over to... We've done, let's see, I think we've done it all. We do the yen, we look at the ruble on that second wave of looking at things, and we look at the Zalt. Oh, I know what we've been looking at too, the peso. Very impressed, I say it every day, we're very impressed with how the president of Mexico is dealing with the situation, having to deal with Crazy Joe. I mean, whew, weird stuff there. All right, you can see here, oh, it went into a weekly sell last week. Interesting. So we've been in a buy since the low 20s. It's not really moving around much, which is really good. I like to see the peso stable for the country there. And you can see we went into a weekly sell there last week on Friday, and it played it all week long. I guess we probably talked about it because I know we've been watching it. Like that, right there. And then we went into the sell on Friday, and it's going wrong. Loser dinner. It happens, traders. You can't be 100%. We're always 85% out of 100. And so you can see the pressure is on here. It's still firmer than it was then, I guess you could say. But we're in that weekly sell. So, if this stays in a sell going into the day, and it looks like it will, it may play itself back down into this area here. But again, seeing a lot of interesting action out of Mexico, and the president of Mexico is doing his best to try to keep stability and coherency going on there, which is really nice. Which is really hard when you got Crazy Joe up in America doing some of the strangest things, not counting, can't even do a news conference. He's got to have a cheat sheet with pictures of the reporters, and the questions all written out on cards. Oh my God! Thank goodness we're a democratic republic with more than one person in charge. Thank goodness he's not a dictator. Thank goodness we have a Senate and a Congress and a Supreme Court, or we'd be in real trouble. Thank goodness we have the chief the Armed Forces Chief of Staff running the military, as much as he is the Commander in Chief. Like, no wonder the Democrats tried to, does anybody know out there outside the United States that the Democrats tried to pull the power of the military away from Joe Biden about 3-4 weeks ago? Now we know why even more. He's not capable of even remember faces or names. So I guess they'll say, okay, Joe, it's okay. Yeah, you can push the button now. And he'll push the button. They're trying to take the power away from him from being able to fire a nuclear weapon. Oh my God. Crazy stuff. All right, let's see what we got here. That is where we stop, I guess, when we look at the second wave of currency pairs. Now we drift over to the energies, because that's what we usually do when we're looking at the pairs trade. So we looked at, let's see, where is it at? We looked at oil. No, that's right. We drifted from the oil conversation to the, oh, look at that. It's sinking even more now. Let's widen that out. Where's that widening thing? Right there. It's drifting more and more down. Look at it. You can see our internal mathematics is breaking down, and this thing is, as we speak, it's starting to have issues there. All right, now let's take a look at robo. Or no, let's not look at natural gas. Natural gas is flirting with the daily buy. Well, it actually should be because of this. So this should be not there. Now we can move that to here, even with it being in the morning, solely because it's higher now than Friday's close. There we are. Oh, wait a second. We never went into a sell. That's what it is. Okay. Excellent. So this thing's just marching along here. And you can see we're in a weekly sell at the same time because of the time of the year. I mean, money doesn't normally run into natural gas this late into the spring. And, it tries to, wait until August or so before they start to reach for it. But they seem to be committing capital to it now. And then last but not least, we'll go over and take a look at the robo gas. This is the gas oil for the automobiles. You can see it's up a firmness here, but you can see the internals are trying to knock down. At the same time, overall, they're expecting some logjam in the on demand because the COVID situation is going away, and they expect to see a lot of people traveling. And so you can see we've been in a weekly buy for this product since the $1.40 area, is it? The dollar, yeah, low $1.40s or mid $1.40s. We've been in a weekly buy all the way up to the 210 area, which is one heck of a move. And the buys have been, the daily buys have been pretty good stuff. Look at this one. The daily buy there, it didn't go into a daily sell until, what was that? That was like from December 4th. No, December 3rd we went into a daily buy. We didn't go into a daily sell until January 19th. This thing was in a ride. It was riding the bull. Woo! They could go out to the rodeo on that one. Watch that thing ride the bull. And the sells were far and in between, which is nice, There was another buy here. And you couldn't take the sell here, where it went into the sell and it gapped up because we're, again, traders, why? We're in weekly buy. And then it went into the daily buy again, and that was another winner chicken dinner like this one here. And then it gave us a sell here for a couple days, and then jumped into a buy again and ran from the 199 area, I guess you could say. Is that what that is? Let's see what that is. That is a close of 199.47, which over a 7-day period, or 7-day period, traded all the way up to $2.13 and a half almost. $2.13 and a half. 214.33. So interesting action. And then it rolled over like a puppy dog, and right there, and then smack-a-doodle the next day. Good stuff here, traders. All right. Now that is the energy complex. Let's go take a look at the metals complex, because we're really scratching our heads at that. There is, let's look at the gold first. There's gold. Gold's in a daily sell for a few days. Been in a weekly sell since, where's that at? Since January 8th. Since the 1900 area, right in here. See, 1900 right there. And so that is that's the action we're seeing there. And then this is the Friday. They slammed it on Friday of that week. Just smashed. Smasheroo. And then, it's been just a slow wind down into the 16s from the 19. Yeah. Alto. Alto Grotto. And then, we can see here we're back into a sell again. They were treating it kind of nice here, and we talked about this, how you just can't be long because it's just not, and every time we thought, oh, maybe now to click the weekly into a buy, and we would have a little circle there looking like it was trying to get there and near it, and it would roll over again. Just would keep on rolling over, and here we are again. Now it looks like, are we going to go challenge these lows in here of the 1670s? I guess we might, from the 1722 area. Now, let's just looking at that. Let's just take a quick look at the platinum. I want to see what the pairs trades. That's trading at 1722. Let's see where platinum is trading. And there's April platinum, and that's trading at almost 1200. So 17 is 522, 526. So it's 526 pairs trade of platinum against gold. It's down almost $500 since we started recommending this scenario that we saw occurring in the technical analysis. That you could be, we call it the Yellen spread, because of the Secretary of Treasury Janet Yellen, former Federal Reserve Chair Janet Yellen. We expected to see this thing pairs back, and it has. It's made 50% profit. So it fell from $1,000 all the way down to, it's a short, so it fell down from 1,000 to 500, actually 400 and change, a high 400s, and now we're sitting at the low 500s, and we're expecting to see this thing try to make itself down into the low threes, high twos. That's where we figure it's going to land in the end. A 75% move. All right, now let's look at silver. There's a Silverado. You can see it's trying to get into daily buy. We had a volatility signal there. You see it's breaking down here. We are at the zeros there. Right here. We are at the zeros. Oop. Oh, let's move that up. I'll make that thickerish too. Okay, now that's moved up. It's at 0.01. It's a plus again. And most of the morning it was a minus or a zero. And so we didn't put a line in there because it's already in a daily sell. We'll see what that does there. And we're in the weekly sell since the 8th. All the way back here. Let's move that over just a little bit so you can see. Since the 29s, 28s, the 28s. So since the 28s, we've fallen all the way down to the 24s, like the high 24s, and we're using that as some type of bottom in here. And so the silver doesn't seem to be able to get any real strength in it, and we shake our heads at it constantly, and it just is what it is. As much as we think it should find a way to get there, it doesn't seem to do it. I imagine silver might, I don't know. I want to say that we'll see the 23s, but you never know. I don't see anything giving me any real clear, not like I see the Turkish Lira, whereas at odds, where the potential consistently has shown me over the decades that the Turkish Lira will head up past the 850. Now here we don't have that indication. That's just an opinion, of my own, nothing more than that. Not and the technical analysis is telling us, because we're in the weekly sell for so long, that it could do that, and I don't think we'll see the 22s, but we could see the 23s, and that's really where we are with the silver. And you can see we've been hanging out in the mid 26s and 25s, and we flirt with the high 24s. I really think it has the potential to bust through the 24 and go to 23 and change. Crazy stuff, but that's what it is. All right. Now, where are we at from here? Let's take a look at. We don't go back to pairs. If someone has a pair they'd like to see, just give a yell. We'll look at it. But from here, we go over to the stock indices, which we've already jumped ahead of. because I showed you my weekly signal of 3 weekly new wave signal. I call them a new wave. This is like a changing of the frequency. So I call it a new wave, and it's occurred 3 weeks in a row, which is historically unique. And here we are. You can see the Dow Jones Industrial Average in a weekly buy. In a daily buy, it's firm. Today it is down 100 and some odd points, but that's nothing for a product that's trading at 33,000 or 32,770 and change. You can see here the NASDAQ, went into the weekly sell here back in late February in this 1300 area, 13,000 area, and has been, it's played all the way down to the low 12s. It's not really damaging itself that much, 10% correction going on. We go in and out of things. It's trying to, it's got a volatility signal going on here. You can see the green line is through on a daily with the histogram. It's trying to tell us that they want to try to buy it. At the same time, you can see, we still are in that weekly sell, but it has not gone anywhere. And this is where some of that liquidation is going on. And so it is catching, the banks, the institutions, and the hedge funds' vision. They are seeing that something is going on there. All right. So money may start to run somewheres over the next, remember, we're going to start April by the end of this week. So we finish off the first quarter. And then April is coming through, and we have 4 weeks of April. And so what do we see? What happens at the end of April? Does anybody remember what we always hear every year for a century plus? And I'm not exaggerating. Sell in May and go away. All right? How many traders have heard that word, that rhyme? Sell in May and go away. Well, maybe they'll start selling in mid-April instead, trying to jump ahead. Now, it may not be, the biggest crash of the world, but it's going to be something dramatic enough, because my math is screaming at this point with the new wave signals that something's coming around the corner. And it could literally just sell down, stop, and then go nowhere. In other words, just the buyers dry up. In other words, they don't sell, they just don't buy. And so then smaller buyers get nervous because the big buyers are not buying, and then they put pressure on it, and it just goes sideways and down and sideways and down, and a little panic once in a while. And it could literally be, I've seen one of these new wave things where we got them for like 4 or 5 weeks in a row, and then the market went nowhere for like 3 months. And that would really probably confuse some people. That would, money is constantly moving, and when something like that occurs, it could literally be that might occur. But doing the collars does not hurt. If you're driving a car, you own a car and you're driving a car, you have insurance, you own a house or houses, a property, you insure that, you have health insurance, so insure your portfolios, traders. Insure your portfolios. Okay, let's jump over to the S&P 500 as we wind this webinar down slow and steadily. You can see here we've been in a weekly buy just for 1 week. We went into the sell the week before. Was in a weekly buy for 2 weeks. You can see it's getting noisy in here. A lot of noise going on in here, like a topping pattern. Let's scrunch that up. And then you can see, whereas we had gone into the weekly buy back in here, on the 3,700 area, 3,600 and change, it ran to the almost 4,000. So, and that was all the way up to, I guess it went up to the 3,800 and a half, went into a sell, went back into a buy, ran to the 39s for another all-time high, and then it, fell into a sell, and it fell down to the 37s, and then, you can see here we're getting congested at this point. Lots of ins and outs. And we don't have any power about that. That's how it rolls, traders. We read the numbers and let them play themselves out. We don't tell the markets what to do. The markets tell us. And that has been our mantra for over 40 years now. Don't tell the markets what to do. Let them tell us. Because for sure, we can't. Hell, I had hundreds of millions of dollars to play with for a long while. And it is tough to try to make a market do something it doesn't want to do. Trust me. That's back when 100 million meant something. Now $100 million means almost nothing in this marketplace. And so we've tried to tell the market what to do, and it doesn't like it. And at the same time, we made hundreds of millions from that. And You can't tell a market what to do. So traders, young traders, new traders, traders that just trade just as much as you would think, oh, if I only had more money, I could do X, Y, and Z. If you're trying to tell the market what to do of X, Y, and Z, trust me, it won't work. The markets don't like to be told what to do. They'll do what they want to do, and all you can do is try to ride them like a wild horse or a racehorse. Okay, and so there is the S&P 500. Let's move that over a little bit like that, right there, and widen out. And you can see we're trying to roll over here, but we're still in the buy, and we're in the weekly buy. So not a lot of panic kicking in yet. And then we go to the last of the four, and that is the Russell 2000. Let's move that up over to there. You can see we've been in a weekly buy since here, and look at this. Right off Monday morning, oh, no, wait a minute. Yeah, Monday morning, here we are. Is that right? Yeah. They're putting a punch into that thing. Let's give that a refresh. Now, where is that? What is that? That is today. So look at that dip. We had that dip right here. And look what it did. It turned around and ran right back up again. When's the last time we saw something like that? That's pretty tenacious. That is one heck of a drop on a Monday morning. But we're in daily buys, so you can't do anything with it at the moment. We have to sit back, let it do its own thing, and then from there we can try to make a decision. Now, the Russell 2000 has all the low cap stocks, the things that the NASDAQ used to have, all the speculative companies that went from $200 million companies to be $200 billion companies. And so that is our, now the NASDAQ 100, or on Dukascopy is referred to as the Tech 100. Let's point that out on J4X there. Let's see. And there it is on J4X. It's the Tech 100. And this is the stocks that move our century, I guess you could say. It's Intel and Google and Microsoft and Apple and Tesla. It's Facebook, and it goes on and on. All the things that power are Cisco powers the modern economy. And so that's now this. Back then, that was a speculative thing. Now it's not. Now they're the top tiered companies because they are, in full support of a modern economy. And so we've been in a daily buy for, you can see we actually have 2 volatility days in a row. We refreshed this, didn't we? Let's just double check. But we have 2 volatility days in a row, and it's fighting not to go into the daily buy. And so that's why we're still in the sell from this one right there. Right there, that one put us into the daily sell. And so it keeps on fighting. Now, we had a red dot here. I guess that's trying to say to us at one point this was a volatility one like it is there. And so we've left it alone. That is in the sell. And that's the Russell 2000. That's the fourth of the 4 stock indices that we watch nowadays here in the States. And the world watches them too. And then you have obviously like the DAX and the FTSE and the CAC and there's a something 40, and there's an Italian one, and there's a one up in Denmark, and so forth, and Sweden, and there's some other stock indices. I'm sure that there's a Polish one. I'm sure, especially with the way that currency and economy move, they're doing really well. And I remember Romania has its stock indice. All the countries have some type of stock indice to identify their best companies. And that's what we're looking at here. And so the action that we're seeing in the stock indices right now are pretty much telling us that something's coming around the corner. And like I said, April's no more than a couple days away. Next thing you know, you're in April. There'll be talk of sell in May, go away. And what's markets like to do? They like to anticipate future events. They don't like to wait around for it to happen. They like to try to jump ahead of everybody. They want the best prices. And so that's probably what we're looking at here now. And so these new wave signals that we're seeing may be indicative of, okay, they're going to sell out, then they're going to fall, and then markets look like will get panicky, and then they may not do anything at all. It just may just go sideways. It may be just that alone. I have a hard time imagining that markets are really going to collapse on any level because of the QE. The QE is very firming, and it took a world pandemic that knocked the stock markets down, and what they really did is it was the volatility traders that did that. The volatility traders went out of business from it. They got crushed. So I'm not totally convinced it could be a world calamity, but I am convinced it's going to be pressure, that's for sure. All right, this is Doc at TGIM. Thank goodness it's Monday. We will all catch you tomorrow. So happy trails to you until we meet again. Happy trails to you, to all our cyber trading friends. Ta-ta for now.